G'day legends and welcome back to another video. In today's video, we are taking a look at the recent bounce following the most aggressive correction in cryptocurrency history. What this bounce means, whether or not the buyers are in control, or if we are going to see an extended pullback. We are also taking a look at the recent weekly candle close, discussing the weekly RSI breakdown, the short-term price action, the key levels that you should be paying attention to, potential next moves, and what the buyers will need to do to regain control of this trend. And most importantly, following the events of last week, we are going to be discussing the macro charts. What has changed on the macro perspective, what the 4-year cycle is suggesting to happen next, and a variety of indicators you can use to not only pinpoint the exact bottom of the next bear market, but of course when that bear market may potentially start. Before we get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin, focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure, raw TA. And if that is the kind of content you are interested in, you can also join us on Telegram, completely free, with the first link down below. You'll get access to all of our charts, our updates, our analysis, our educational posts, news events, etc, to stay in the loop with the cryptocurrency market and of course the relevant economic news. And if you are interested in joining the VIP channel, you can join the VIP channel by clicking the pinned comment of the free channel and contacting our admin for more info. Let's go ahead, guys, and jump into it. So, yes, guys, this was a brutal last week for Bitcoin. We saw one of the largest, if not, it was the largest liquidation events for cryptocurrency history happen in the space of a few hours. Now, I've talked a lot on our Telegram channel about what I think this means, what happened, what it was caused by, and the very, very clear manipulation and collusion that was happening with the government in USA, particularly President Donald Trump, the large hedge funds, and potentially even a variety of exchanges to actually allow this to happen. I'm not going to get into that today. Of course, if you want to find out my thoughts, you can go ahead and check that out. We've already talked about it a fair bit. Today, we are focusing on the charts, just taking a look at what has happened, what is going to happen, and what is happening as we speak. So let's start on the market data. 24-hour volume and liquidation still very high, mind you. There's a lot of emotions in the market right now. Everyone is very reactive. It does take a few days after these volatile moves for the market to kind of simmer down, find its footing, and regain some sort of clear trend for the price. Volume is up 18%, just shy of 400 billion. Liquidation 635 million, down 6.3%. Very, very small in comparison to the other day's $19 billion in liquidations, and that was actually probably even false. I heard reports of potentially $400 billion in liquidations, but some exchanges weren't reporting those liquidations, Binance being one of those. So potentially we saw liquidations over 100 billion the other day, something to keep in mind on. Moving over to the DXY. DXY has bounced just a little bit again with some potential threats of tariffs. We saw the DXY push back up. Again, President Donald Trump is kind of pulling back on that tariff news over here. Again, another reason I believe this is all just manipulation. Just the timing of these events are just too coincidental to be anything but strategic planning and execution on behalf of these exchanges, not particularly any one exchange, but mostly large hedge funds and of course the government working together to facilitate this kind of move to occur. But we have seen the DXY push up a little bit. It's pulled back a little bit now. We are waiting to see how the Federal Reserve tackles future interest rate decisions based on developing inflation data. We know that they are taking more of a wait and see approach because they are trying to boost the job market by dropping rates, but not so much that inflation begins to rise. If inflation begins to rise, that could result in the Federal Reserve pulling back from interest rate reductions, and that could result in the market pulling back. So it could be a catalyst for a bit of a correction in the market as well. So pay attention to that. The S&P 500, just as we saw for Bitcoin, by which all risk assets had a very volatile week last week, it actually dropped below this uptrend. It closed the weekly and we opened just on that trend line. So again, we have to assume this is going to be the top for now for the S&P 500. That is going to be an assumed top for the S&P 500. We are watching to see what happens. Of course, this trend has been broken. If we do maintain below this trend line, we are expecting steeper corrections. The only time we're going to be looking for continuations higher again is going to be if this local high breaks. Until then, we are going to be a little bit more, I guess, pessimistic and cautious for the S&P 500. Now, there are some theories around what is happening, particularly with Donald Trump and the timing of these events. We've seen in the past the playbook they've been using to actually continue to boost the risk asset market. You can read it very quickly over here. We're not going to go ahead and read it out, but this is something that may be happening again. If so, this could be one big trap toward the downside. Again, a lot of elements coming into play. We can't focus on that. We have to focus on what the charts are suggesting. Let's go ahead and jump into Bitcoin's analysis, guys. Like we said, we have so much to be taking a look at. We are taking a look at the weekly candle close, the breakdown here on the RSI. We are taking a look at the short-term price action, what this bounce means, the key levels from the daily, the 3-day chart, and even breaking down into the immediate short-term price action. Is this the dead cat bounce? Is this going to be all we see? And we're going to see continuations back down, or will we have this strength to push back upwards? We are answering that in the video today. And of course, probably one of the most interesting segments of today's video is going to be that macro analysis. What are the dates based on the 4-year cycle projecting the next bottom, the next top? What indicators can we use to predict the bottom and potential reversal points, etc., etc. So before we get into all that, make sure to go ahead and sign up to BitGet, BitUnix, and BingX. The exchange links are down below. You'll get a lifetime trading fee discount of 15% off all your trading fees. You'll go to support me making this content on a daily basis. And of course, guys, you'll support yourself in your trading journey. So the links are down below. Go ahead and sign up. And of course, we'll see you back in just a second after this ad. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other 2 exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's go ahead and get back into it. Now, I want to start on the short term and then progressively build up to the macro chart. So let's just jump down to an hourly chart. As we can see, Bitcoin has bounced from that $110,000 level. We have come back up, and we are now retesting a very important point of resistance at 115,000. Now, just taking a look at the hourly chart here, if we zoom in a little bit, you can see what was once prior support became future resistance. What is future resistance becomes prior support. We failed to hold that, and therefore it is now resistance again. This 115K level is a very important point of resistance on the hourly time frame. So we're watching that very, very closely, and there's a level we are currently retesting, as you can see. If we zoom out again to the 1 hour over here, you can see on the market cipher, we do have a red dot printing. This is suggestive of some weakening positive momentum. Remember, the momentum is positive because we're above 0 on the oscillator, okay? The RSI is still uptrending, but we are seeing some weakness develop with some larger wicks toward the upside as we approach resistance. We are seeing, again, that turn over a little bit, suggesting that we are seeing weakening positive momentum, which essentially means either 1, buying pressure is decreasing, or 2, selling pressure is increasing at the rate of which buyers cannot absorb. This increases the potential for a pullback for Bitcoin. If we were to see a pullback, we're watching this change of character level as a potential base of support. This will be around that $112,000 level. Of course, if we are able to absorb this selling pressure and break this resistance, the next resistance we are watching is that 117.5 to 118K level. Again, 117.5 to 118. Prior resistance becomes future support becomes current resistance. So again, we can see here, this level acted as a major resistance in the past. It will likely act as a resistance again if we come up to retest it. What needs to happen for the buyers to take full control of this trend? It's a very tricky question to answer in terms of the higher time frame because this throws a massive spanner in the works in regards to identification of the trend. It massively skews the perception and the tone of the market. And I think perception and tone control is something that is very important when we look at trend continuations, as it influences retail's decisions to purchase or sell assets. Retail investors, retail traders generally need justification and reasons to take positions, and they use trend and they use tone, and they use perception of the market at the time, or the overall, perception of the market, sentiment is the word I'm looking for, to make those decisions. So after we see these large corrections and bounces, that can sometimes act as a bit of a sentiment shift that this over here is bullish, even though the broader perspective is that we're still massively down from these key levels of resistance. And while we remain under these points of resistance, the trend, although it saw a very volatile correction, is actually still downward sloping. So we take a look at what the buyers will need to do to fully regain control of this trend. We need to break the respective downtrending resistance we were trending below prior to this volatile move. Remember, yes, this was an anomaly in the price action, but there was a downtrend forming already at this point well prior to that correction. This downward move was expected into 118K. This is something we were discussing all of last week. We were discussing the potential breakdown. We even had it in our thumbnail. The potential breakdown of 120,000 would likely result, you can see it over here, into a correction at 118K. It was only when we reached 118K did we see that news event, did we see that manipulation, which resulted in that large liquidation event. But this downtrend was present before. So again, a lot of people saying this was unavoidable, this was unpredictable. It's not about predicting things. It's about trusting the chart, positioning yourself based on the probabilities so that if something like this happens, you are with the trend. You are in direction of which the market will likely move anyway. So you either capitalize on it or you're completely out of the market and you avoid it. So there was weakness in the chart present, and that weakness is still here. We have seen some short-term mean reversion. This is completely expected as the market massively moved to imbalance in one direction. We generally see mean reversion occur back towards a more baseline or a more healthy price. The market is able to find demand again. That's generally around our 200 to 50 EMA on the daily and 4 hourly, which we can see we are kind of pushing into now. But overall, for the buyers to fully reclaim control, we need to see, number one, a trend shift, which means we need to break this downtrend. Number two, we need to see a momentum shift. We're kind of seeing that momentum shift over here already, which is a very good preliminary sign. And number three, we need to see these horizontal resistances break, the key one being 118. So until we break 118, we break this downtrend and we maintain this positive momentum, it is possible that we see corrections develop back into these lows. That is a real possibility. If we are able to see all three of those things occur, I will be then expecting continuations back into 124, potentially back into these prior highs. That is something we also need to be watching. So let's take a look now at some of the key levels on the daily and the 3-day. In terms of the daily, we have some very important levels. We have, of course, got this uptrend respecting this uptrend, this diagonal uptrend you can see here. We've had 3 consecutive lows now. Respect that level on the daily chart. This, of course, is going to act as a future trigger point for extended correction. So if we break below here on the daily chart, that will be very clear validation. The market is going to go lower. Where would we expect? Well, our sell side liquidity still hasn't been tapped. 98 to 100,000 would be the expected target if this daily uptrend breaks. Moving over to the 3-day chart, we are also watching that 50 EMA again. We've held above the 50 EMA yet again. Another trigger point we are watching for potential correction of this uptrend. So pay attention to all those levels. In regards to whether or not this is the top for Bitcoin, we'll come back and discuss that in just a moment. Moving over to the weekly chart, the weekly candle close has occurred. We've had some good stuff here and we've had some bad stuff. So let's talk about the good stuff first. The good stuff, number one, we avoided a bearish engulfing candle. Of course, the bearish engulfing candle would have been fulfilled if we saw the weekly candle close below 112,000. As we know, and as we just discussed on the short term, that 112,000 level is the change of character. So we have a structural shift in the trend below this level, which would facilitate continuations lower. So it's a very good thing that we maintained above 112. If we break below there, we will likely go very low. The bad, though, is number one, we saw a pretty large liquidation event, of course, but we saw deviation from the range high, which means this is actually going to be an expected top. Now, will this be the quote-unquote 4-year cycle top? It's not really the point. This is a top for now. Based on the weekly chart, this is an expected top, and we'd expect pullbacks to continue. Again, this weekly candle has massively skewed the tone of the chart, because if we didn't see this liquidation event occur, we'd probably be sitting around 118K, and we'd be expecting corrections lower still. But now that this liquidation has occurred, it massively either speeds up, it has sped up, I guess, the time frame of the market's correction, or we've completely now have no more need to see that lower correction take place. And again, to answer that, we kind of have to wait to see how the price action responds to these levels of resistance. So it does throw a spanner in the works. It makes it very hard to read per se. Another bad thing we have seen is that we have seen the weekly breakdown on the RSI, the symmetrical triangle formation. Again, this will be a negative momentum shift over here. If we were to see this play out further, the potential target for this is actually much lower than 98 to 100,000. This would be around 80 to 75K. So this would be a very, very bad thing and a warning sign. Very important to see how this current weekly candle develops, because if we are able to get back over here, we essentially invalidate. We would not want to see a close back above this uptrend, because any close above this uptrend invalidates that trend line and tells us that it is a false breakdown. If we are able to remain below here, it is expected that we see continuations to the Gaussian channel and the 50 EMA. That is it, guys. Let's talk about now the macro chart. So the 4-year cycle, a lot of you guys were pretty confused. You're like, well, not confused, but I guess surprise is a word that the 4-year cycle came, the 4-year cycle top, or we saw the top per se on the 6th of October, 2025. And I guess I'm seeing a lot of posts around Twitter saying, how did people project this? How was this predicted? This is a level that we've been talking about since the beginning of 2024, late 2023. I'll just go ahead and bring up this post. We talked about this back in 2024. We said the 6th of October, 2025, this is a 4-year cycle. You can see all-time highs, the lows, all-time highs, the lows. The 6th of October, 2025 will be the next all-time high. This was based on the 1064-day bar theory, which we've broken down in extensive detail. You can see all of this mathematics we've done here to talk about what it is, what it means, etc., etc. But the key takeaways are that if we see a new top for Bitcoin past the date of the 29th of November, there is a statistical likelihood that the 4-year cycle has officially broken. In fact, there's almost a 100% chance we could actually assume the 4-year cycle has been broken based on the 1064-day bar theory, which has been, I guess, tracking the entire cycle thus far. If we look at the prior cycles, right, we've had the 1064-day bar theory play out almost perfectly every cycle. This goes back to the 2011 to 2013 cycle. So a top happening after the 29th would mean that this pattern we have seen and happened again in 2021 to 2025 over here has been broken, confirmed. So that is something we have to pay attention to. So there's a real potential the top is in for Bitcoin based on the 4-year cycle. What does that mean for the future of Bitcoin's price action? So taking a look at this over here, we can see this is the weekly chart. If we just take a look at the distance from tops to bottoms, we have around 365 days. It's about 1 year on the weekly chart. It's actually not quite 1 year exactly on the daily chart, but it's around 365, so 52 bars from top to bottom. So if we take that pattern, we bring that forward, that would mean the next bottom for Bitcoin would occur around October 5th, 2026. Okay, that would be the projected bottom for Bitcoin at the bottom of the bear market. If we're taking a look at what we have seen from the Gaussian channel in terms of where the bear market starts, we can see here after the top of each cycle, we see a pullback start, but it's only really when we break below the Gaussian channel upper band do we really start to see this strong capitulation downwards really take off, right? We have this period of where there's still optimism in the market, where there's still potential hope, but it's when we break below that Gaussian channel upper band on the weekly, that is really when we start to see pure capitulation begin. And when we really start to see, flash crashes begin, it is when we break below the lower band of the Gaussian channel, we see these significant pullbacks for Bitcoin, basically taking us into the lows. Now, a very interesting chart, the 2-week Ichimoku cloud chart. I want to actually focus you guys on the baseline. We'll go make that nice and thick. You can see every single time historically, even moving back to our 2014 bottom over here, every time the baseline closes below the leading span A, what do we see? We see a bottom for Bitcoin. We'll show you again. The baseline closes below the leading span A. What do we see? We see a bottom for Bitcoin. We'll show you again. 2022. The baseline closes below the leading span A. What do we see? A bottom for Bitcoin within a 2-week window. So this could be an indicator you could use moving into next bear market. If we see that happen, if we see the baseline close below the Ichimoku cloud, we could potentially see a bottom for Bitcoin wherever that may take place. And then that is the baseline, of course, and the price will continue back upwards. Something to keep your eyes on. So I'm seeing a lot of people comment, this can't be the top. We have no indicators suggesting this is a top based on prior cycles. I would like to tell you, very importantly, that this cycle has moved very differently, not in terms of the date range trend, but in terms of the way the price action has moved in comparison to prior cycles. The prior cycles were a lot more parabolic and exponential. This was much more gradual with periods of volatility, periods of drawn out consolidation, periods of volatility, drawn out consolidation, volatility, drawn out consolidation. In a cycle where we have something like this, our moving average based indicators are going to be reflecting incredibly different in comparison to cycles where we have much, much more volatility. We would likely see these traditional top single indicators, such as the pi cycle top, not be showing similarities this cycle in comparison to the prior cycle, not because it's not the top, quote unquote, it is because of the way the price action has moved. Remember, these indicators do not predict tops. We don't top because of these indicators. They are reflections, they are derivatives of the price action. The price action tops based on upcoming or developing economic policy, market sentiment, industry specific developments, etc., etc. So something to pay attention to there. These are some indicators I'm watching. So let's go ahead and wrap up and summarize this video. Bitcoin has seen a significant bounce. It is not enough to confirm the buyers are fully back in control. The trend on the daily is still downwards pointing. We have defended some very important levels of support, facilitating mean reversion back to the 50 EMA, back to 115,000, but that is not enough to be completely confident that this downtrend is over. We need to see a structural shift. We need to see 118K recovered. In terms of the weekly chart, we managed to defend ourselves from an incredibly bearish weekly candle close, but we didn't have an amazing weekly candle close either. Having the deviation from the range high, having the breakdown on the uptrend of the RSI, symmetrical triangle formation, the risk of steeper continuations are still in play. Whether or not this was all by design and we will see the pattern repeat, which is, of course, President Donald Trump going through those motions of indicating tariffs, indicating trade wars, resulting in markets pulling back, coming back out, and then saying these things are not going to happen, resulting in markets pushing new all-time highs, or whether or not this is actually the top based on the 4-year cycle is something we have to wait and see. But all in all, if you trust the trend and trade level by level, none of these questions really matter that much. Thanks for tuning in, guys. Have a fantastic rest of your day. Catch you guys in tomorrow's video. I'll see you all then. Bye.